The breathtaking surge in tech mega caps gained further traction, with the Nasdaq 100 poised to notch a historic first half of a year and Apple Inc. hitting the $3 trillion milestone. Wall Street decided to look at the glass half full on Friday after data signaled inflation is moderating at the expense of economic growth. Stocks extended this year's gains, with big tech consolidating its leadership amid the stratospheric ascent of artificial intelligence. Traders also continued to adjust their positions at the end of a quarter marked by the fear of missing out on the rally. Nearly $5 trillion has been added to the value of companies in the Nasdaq 100 since the start of the year, with the tech-heavy gauge defying bubble warnings and jumping almost 40%. The advance in the most influential group in the S&P 500 helped push the index up 16% in 2023. Gains have been even more pronounced when narrowed down to the megacap space, which has soared 75%. The Big Seven, including Apple, Microsoft Corp., Alphabet Inc., Amazon.com Inc., Meta Platforms Inc., Nvidia Corp., and Tesla Inc., boosted profits by 14% a year during the decade through 2022. While their combined earnings slumped more than 20% last year, they're expected to recover swiftly. The Nasdaq 100 rose about 1.5% Friday, while the S&P 500 headed toward its highest since April 2022. Nvidia, which has roughly tripled this year amid the AI frenzy, was up nearly 4%. Wall Street's favorite volatility gauge, the so-called VIX, extended this year's plunge to hover near 13. If history is any guide, the Nasdaq 100's strength this year augurs well for the rest of 2023. Years that start with rallies in the index of at least 10% average returns of about 14% over the second half of the year, though that shrinks to an 8.3% gain when the first half gain tops 20%. The market's fascination with the power of generative AI has trumped every major issue that could potentially drag down sentiment this year. Recession fears, elevated levels of inflation, prospects for more Federal Reserve hikes, geopolitical risks, the debt ceiling debate and the collapse of a few regional banks. While the rally in AI has drawn comparisons with the dot-com bubble of 2000, when the market was driven by a similarly narrow breadth of technology stocks before a crash, BlackRock's Tony DeSpirito said earnings growth is coming. Demand is really real, said DeSpirito, BlackRock's chief investment officer of U.S. fundamental equities. I think that contrasts what's going on in AI versus the metaverse a year ago, or virtual reality. The orders are there. Still, after such a strong rally, there's growing concern about valuations that has recently spurred a surge in bearish bets against the largest tech companies. Short interest as a percentage of shares available to trade is near 12-month highs for Microsoft, Tesla and Amazon, according to data compiled by S3 Partner. We don't believe the AI trend is a bubble but advise investors to be selective on AI-related stocks after the strong year-to-date rally. From a positioning point of view, we recently closed our self-help theme as we see better risk-reward in mid-cycle industries software, internet and tech laggards. Barring evidence of any technical deterioration, it's likely that markets will push even higher into mid to late July ahead of a possible minor correction into August. Until evidence of more rampant overbought conditions joins forces with more bullish sentiment and some evidence of defensive strength and/or waning technical breadth, it's arguably wrong to consider abandoning this rally based on overbought conditions alone when technical trends remain very much intact. Treasury 10-year yields fell to around 3.8%. The dollar dropped, extending this year's losses. Key measures of U.S. inflation cooled in May and consumer spending stagnated, suggesting the economy's main engine is starting to lose some momentum. The Personal Consumption Expenditures Price Index, one of the Fed's preferred inflation gauges, rose 0.1%. From a year ago, the measure stepped down to 3.8%, the smallest annual advance in more than 2 years. The May PCE report released today is relatively benign from a Fed perspective and leans in the direction of the Fed ultimately delivering only one more rather than two more rate increases. This should curb a bit the recent backup in yields and favor big tech. Some of the main moves in markets. Stocks. 1. The S&P 500 rose 1.3% as of 1:39 p.m. New York time. 2. The Nasdaq 100 rose 1.7%. 3. The Dow Jones Industrial Average rose 0.9%. 4. The MSCI World Index rose 1.1%. Currencies. 1. The Bloomberg Dollar Spot Index fell 0.3%. 2. The Euro rose 0.4% to $1.0913. 3. The British Pound rose 0.8% to $1.2708. 4. The Japanese yen rose 0.3% to 144.31 per dollar. Cryptocurrencies. 1. Bitcoin rose 0.4% to $30,525.28. 2. Ether rose 4.2% to $1,927.31. Bonds. 1. The yield on 10-year treasuries declined 3 basis points to 3.81%. 2. Germany's 10-year yield declined 2 basis points to 2.39%. 3. Britain's 10-year yield was little changed at 4.39%. Commodities. 1. West Texas Intermediate crude rose 0.7% to $70.32 a barrel. 2. Gold futures rose 0.4% to $1,926.20 an ounce. Thank you so much for watching this video. We appreciate your continued support and look forward to serving you with more exciting videos in the future. We hope it has been helpful in understanding the world of passive income and affiliate marketing. Don't forget to hit that subscribe button, like and comment below and turn on your notifications so you never miss a video from Passive Income Journey 777.